Welcome back, everybody. This video is going to be a really good one. It's going to be a live stream at the end. As always, you can AMA. That stands for Ask Me Anything. But for the beginning, first half of it, I'm going to go over the value prop of HEX, PulseChain, PulseX. Why bother with any of these coins? Why would anybody bother getting interested at all? And I'm going to go over some of the basics. So it might be a review for you, but it's going to be some of the narratives behind, why are we doing all of this and why are people so excited about it? Why are thousands of people across the entire world literally so excited? And why is the HEX tribe, HEX community, whatever you want to call it, why is it one of the biggest crypto communities despite being part of the 90% dip that happens in a brutal bear market that we're experiencing right now? There's nothing else like it. Maybe the NFT community, maybe, but there's really an anomaly here with the HEX ecosystem, the PulseChain universe, and we're going to explore why. We're going to go back to square one. We're going to talk all about the value proposition. Depending on who you are, there's different strokes for different folks, different narratives appeal to different people. But no matter who you are, if you have an open mind and you some level of intelligence, I think you'll be able to understand why people are so excited after I'm done with this today. So thank you guys for all attending. Greetings, UFO to go, Hexponential, Red Squirrel, HexiQuinn, Fandom, Brother, Chaotic Creations. Always great to see all you guys. Let's see here, guys. All right, well, let's give a quick shout out to my patrons, which are very new. These guys are getting exclusive member benefits right now. We're going to let people trickle in, give them a few more seconds here, but thank you to Confectioner, Jeff Harang, Curtis Dem, Jeffrey Snyder, Amanir Vora, the Crypto Tractor, aka Dr. H. He's very lively in my chat. Abel Corona, Charles Stark, Hex Alt Ed 1, Benny Davis, Timothy Harris, JB, and of course, HexKin. These guys are some of the OGs of the Patreon group. So they're making it really fun for now. And we would love to see more people in there for all types of benefits, exclusive content, talking strategy, one-on-one questions answered, all kinds of benefits. You get to suggest new content ideas, all that stuff. We got people trickling in. We've got 65 people here, 75 now. We're going to get into it in just a minute. But yeah, so really, really wanted to just thank the patrons, because you guys are what keep me going, right? And not to mention all the money used from that Patreon subscriptions. Not only do you get all these exclusive benefits, content, all that stuff, but a lot of that money is going to be used to go back into IRL videos, right? This is donation money that I'm pretty much just going to give back, because a lot of you guys liked the groceries. A lot of you guys liked the paying for people's groceries video. And there's a lot more of that type of stuff I can do in real life. That's really entertaining. It's fun for me. It's fun for you guys. And it's fun for the people that, get to win $100, for example, if they answer a trivia question about Hex or something like that. That's just kind of my plans for all this. But guys, let's get back to the basics. Let's get back to the value prop. Yeah, smash the like, plebs. If whether you're a pleb or not, smash the like button, guys. Really love that. Crypto Tony's in the house. Hex Flex, what is going on? Do y'all know Kanye West is spilling the beans on Adidas to going into Apple Pay and freezing transactions? Okay, wow. I'm not up to date on the spicy drama of the Kanye West world. I'm not really following Kanye West, guys. I'm not really following. Good afternoon, guys. Thank you for spending your Saturday here with me. Hex Tribe, the beautiful people of Hexaco. Guys, why are people in the know so excited? What are we even doing here in PulseChain and Hex? What are we doing? What are we building, right? The goal of cryptocurrency was to create a totally parallel financial system with no middlemen. And, Bitcoin paved the way. Bitcoin walked so everything else could run. And Bitcoin was a major innovation in that it created digital scarcity. You can't just copy and paste it to Bitcoin, right? Just like every other cryptocurrency. But then Ethereum came along and gave rise to a Cambrian explosion of innovation. 99% shitcoins, of course, but there's a lot of stuff that is real DeFi on Ethereum, and DeFi was the next big innovation in the cryptocurrency landscape that allowed us to build smart contracts. Now, smart contracts can define parameters for new coins, but they don't have to. A smart contract can be a coin, or it can be a service, or it can be both. Every altcoin is a smart contract, but not every smart contract is an altcoin. Does that make sense? So if you're new to crypto, you're trying to figure out this navigating this landscape. Ethereum is a big innovation because it can actually do stuff. You can run small programs on top of the Ethereum blockchain because it functions more like a decentralized computer. And the narrative that it's kind of stuck with, where Bitcoin is digital gold, right? Bitcoin's a digital store of value, and that is just fine. It can keep doing what it does. no hate to Bitcoin. You got to pay your respects to Bitcoin, right? But Ethereum came along and offered decentralized finance. So, the goal of cryptocurrency was to replace all of the corrupt middlemen and replace all of their corrupt, terrible banking, services, right? And there's a lot more than just gold, right? There's a lot more than just digital gold. There's savings accounts. There's, certificates of deposit. There are lending protocols and leverage protocols. All these types of things are, real DeFi, and real DeFi doesn't have any backdoors, admin keys. Real DeFi is immutable code. And so Ethereum has got a lot of good stuff on it, although it's, 90% of it really is crap or has weak narratives that really won't stand the test of time. Ethereum is a very remarkable innovation, so shout out to Vitalik for all that. And what's the problem with Ethereum today? Well, basically, it's become a victim of its own success. And so Ethereum is a victim of its own success, which is actually a good thing. What does that mean? It means that so many people are using the Ethereum blockchain today that it's basically overflowing. Even in a bear market, it still costs me somewhere between $1 to $2 just to send a little bit of ETH or a little bit of HEX to another person. Okay, that shouldn't be the case, right? Imagine if you had to buy a cup of coffee every day and pay a $1 transaction fee on top of that, right? Vitalik Buterin famously said in 2014, the internet of money should not cost more than 5 cents a transaction. And he's often mocked, although he is right. He is right, but Ethereum has been slow to add enhancements to their network capacity and essentially their transaction fees. So when you have everybody driving on the same road, the Ethereum blockchain is that road, the network gets congested. And the network gets congested and we have overflow. And so that's where PulseChain actually comes in. So PulseChain is not a competitor to Ethereum like a lot of people might think. It's actually meant to have a symbiotic relationship by sharing the load with Ethereum by being a very closely identical copy. Obviously, there will be several parameters changed that will make it more user-friendly. It'll lower the fees for a longer period of time, and it'll be a better ecosystem for people to play around on with gas-intensive applications, whereas they're priced out in the Ethereum blockchain. A lot of users, people don't realize, are priced out of using their own applications, including HEX users, right? For HEX users to end a stake, a long stake, like a 2 year more or longer stake, it costs an arm and a leg. It can cost up to $100+ to end that stake in the gas fees. Gas fees are transaction fees, as we all know. And it shouldn't be the case, right? Because you're basically pricing out anybody that can't afford to chuck in more than a couple $100, because the gas fees are just eating people alive. And people forget, right? Because Ethereum might seem a little better at the bottom of a bear market, but when the bull comes back, right? When it comes back, how quickly people forget the absurdity of the Ethereum gas fees at the peak of the last bull market, right? So gas fees were anywhere from $50 to $100 just to do a Uniswap swap. Uniswap is the decentralized exchange. That should not be the case, and so that's where PulseChain comes in, right? If something is overflowing, this is the concept of horizontal scaling. So if you've been in business at all, if you know anything about business, you might have heard the term horizontal scaling before. It's basically like, when the McDonald's on the corner gets full, you don't make the McDonald's bigger, you make a new one. When the gas station gets full, you build one across the street on the corner. You don't just keep trying to make the gas station bigger and add on to it. And now, yes, layer 2 solutions are going on the sideline, but in the meantime, we need innovation that matters to the end user, the retail user right now, right? In my opinion, layer 2 and all that stuff, the UX is so far off, many, many years off, whereas PulseChain's right around the corner. PulseChain is the horizontal scaling solution to help lower fees on the Ethereum blockchain, not to mention, its other value props like world's biggest airdrop and cheaper, faster, better for the environment, deflationary, right? Sometimes people like these different narratives, right? PulseChain is deflationary, whereas Ethereum is inflationary, or it will be, I should say, because it doesn't exist yet. PulseChain's right around the corner, but you should know why people are excited, right? Deflationary, now that's debatably, inflation is neither good nor bad. It's out of control inflation that's bad. So some people just assume that all inflation is bad. Not really a correct assumption, but good for you guys. If you don't like inflation, PulseChain will start off with a finite supply, a very, very large finite supply, and then 25% of all transaction fees in PulseChain are actually going to be burned. So cheaper Cheaper to use because less people on it and more, more throughput. Different enhancements are going to be made. Cheaper is probably the biggest value prop of PulseChain. Cheaper, maybe a bit faster, and it's going to inherit any updates to the consensus code that Ethereum runs in the future because it's a fork of Ethereum. So any updates to Prism when sharding happens are going to be inherited into PulseChain, which will continue to make both networks even better, right? So cheaper, soon to be faster, deflationary. What else do we have? Better for the environment, right? Because objectively speaking, ETH 2.0 and PulseChain, they're proof of stake consensus algorithms. They use less electricity. That's simply a fact. So, Bitcoiners like to worship proof of work to a degree. And although it is a very remarkable innovation, it wastes a lot of electricity. And you could say, oh, yeah, well, 60% of that is renewable electricity. Sure. But if we have a working system that uses 99.9% less electricity in general, and it works fine, and it's been working for over 5-6 years now, that's been proven out. They both have their trade-offs, right? And I'm not here to argue one is better, one is worse, but one is objectively better for the environment because it simply doesn't use the resources that something like a Bitcoin would use. So you've got all that going for PulseChain. Cheaper, soon to be faster, deflationary, all this stuff, proof of stake, better for the environment. But most importantly, I mentioned the world's biggest airdrop. And why do I mention that? Because that's really important, guys. It's a blockchain with the entire system state copied over. So if you're a little more technical, you might understand what that means. Similar to what ETHW did, right? Ethereum proof of work. They just forked the entire blockchain and they brought over the entire history of the blockchain. PulseChain will be the world's largest airdrop because it will be the world's largest system state copy of the entire history. Every smart contract ever built on Ethereum, everybody's balance, every wallet, every private key, every coin is now copied over onto a nearly identical blockchain. And people might be underestimating how big of a deal this is because it's a big deal for retail, and it's also a big deal for developers. When a developer has to learn a whole new programming language or redeploy their smart contract onto a new blockchain that's, might be a little bit untested or brand new, they're hesitant to do that. And Ethereum is kind of the premier blockchain right now where all the real respected DeFi innovations are happening. And so PulseChain, by changing as little as possible, it's going to change some stuff like the S-load function and all that to make gas costs cheaper and all that. But, developers are going to have a much easier time. They can actually literally use their existing front ends today and simply point it to a new network, the PulseChain network, and have the entire system state copy over there. Just like go.hex.com, just like the HEX smart contract, all your stakes and HEX, all your liquid HEX, it's all copied onto the PulseChain blockchain when the fork happens. This is great because it gives developers a lot less friction to come over and build on top of PulseChain. And we're going to see how many real good quality devs and good quality projects actually do come over to PulseChain. This is what I'm calling the great filter, right? Now we've had Ethereum, which has had, 5 years to exist and 5 years to beta test, where millions of dollars have been lost to faulty smart contracts and poorly written code and just outright scams. We've had a lot of time to see what works and what doesn't work. And so with PulseChain, we can bring over the best of the best from Ethereum and make it a little better, tweak the minimum possible in the code, because that just increases attack surface, right? We're not reinventing the wheel. We're taking what already works and we're putting it onto PulseChain. So PulseChain's where real DeFi is going to live. It's going to be, I hope, it will become a quality over quantity blockchain. Now, of course, you can't stop people from building on a permissionless blockchain. There's going to be plenty of scams, plenty of stuff for you to get wrecked on, but we're the community. It's up to us to kind of educate people so they realize, that to be investing in real DeFi that's immutable with no backdoors, it can't be hacked, turned off. We have this education and we realize that the most important way to onboard new people is just by educating them about it, which is what I'm doing right now. So easier for developers to hop over. It's also makes a very, very compelling case for retail to at least come check it out. Because, guys, retail is in it for the money, okay? 99% of you watching are purely in it for the money, and you don't even care how the tech works at all, as long as it works. And that's okay. I don't care about how my iPhone works. I don't care about how my smartphone works, because I just care that it does work, and it's a beautiful product, and I enjoy using it, right? And I'm sure a lot of you are the same way. We don't have the time to bother to even learn about this tech in the first place. I mean, I hope you do. The more knowledge you have, the better off you'll be. But you got to understand where retail is coming from. You need to understand the mindset of a retail individual. And if they hear that they have free coins copied onto another blockchain, you bet your ass they're going to go over there as soon as they can and flip their network. It's a simple flip, right? It's a click of a button. You click a button in your MetaMask account, you're over on a new network, and you have all these free coins, and you get to go play with them and see if they're worth any money, because retail is vastly much more in it for the money than they are for the tech. Developers, people that are thinking on a broader scale are typically in it for the tech, and the money. Let's be honest, and the money. But most people are less so in it for the tech, and they're more so in it for the money. Being the world's largest airdrop allows people to come over and check what's going on. Hey, is my chain link on PulseChain worth anything? Oh, it might be worth, $10-$20, but oh, that's cool. What are all these new applications? What is this? What is this thing called HEX? What is PulseX? What is fiat.io? What is this famous thing? What is liquid loans? All these premier applications being copied from Ethereum over onto PulseChain are going to be very attractive. And once people are in the ecosystem, it becomes a one-way diode, right? A lot of people are going to come, and once they experience the low-fee environment, the quality apps, once we direct them to quality things, it's going to be really hard to have them convince them to go back to Ethereum, where they're paying $20 to swap one thing for another, when you can play around all day long on PulseChain for less than a penny for transaction fees, right? And it's just simply a better user experience, guys. Tesla itself didn't spend a dime on advertising in 2020, 2021. Probably this year too. I haven't checked. They didn't spend a dime because they simply made a better product. Okay. Tesla cars are just better. So PulseChain doesn't need advertising. The product will speak for itself. And I'm sure, what I'm doing right now is effectively, community advertising. When people talk about something, word of mouth, real people with real testimonials and real experience, that hits harder than any paid advertising can possibly do. Okay. There's facts and studies to prove all that. It's just when people hear it from another person that they trust and like and know, it means a lot more than seeing a little banner ad. So I think PulseChain will thrive simply because, yes, it's a horizontal scaling solution, but it's also a one-way diode where a lot of people are going to come and they're not going to want to go back. That's why I'm excited about PulseChain, horizontal scaling. But you have to do the horizontal scaling first before you can do the vertical scaling. What is vertical scaling? Well, take the company Apple, for example. Okay. Apple, they own all of the means of production, from the factory to the software to the hardware to the supply chain. When you own everything in what's called a walled garden, you might hear the founder Richard talking about a walled garden. It's essentially the concept of vertical integration, and that's the goal, is for the PulseChain ecosystem to be the pipes, right? The network layer for everything else like HEX and PulseX and any other good, cool, real DeFi application to build on top of it. It's going to be a walled garden that is going to be the most quality applications in the crypto space. And of course, a number of scams, of course, that are going to come and go, just like you'll see with any new blockchain. But this is horizontal scaling first and then vertical integration up. So that's kind of the value prop there. That's why people are excited about PulseChain. That's why they're excited, guys. That's why they're excited. So yeah, I use the analogy of Apple. Look at how well Apple did. I'd love to see PulseChain be the Apple of crypto. You can always use Ethereum. Ethereum's not going anywhere, in my humble opinion. Neither is Bitcoin. You can always use all this stuff, but PulseChain will be an ecosystem for cool, safe, real, decentralized products that are a joy, that are a delight for people to use. And again, it's not a competitor to Ethereum, but it will share the load, right? It'll share the load. No need to reinvent the wheel here. That's kind of the MO. When it comes to crypto technology, a lot of people have this misconception that there's a Silicon Valley quote that they say move fast and break things because you can always fix it later. Well, that's not true with crypto. You don't want to move fast and break things because you don't want to be beta testing millions of dollars worth of financial technology where people have, TVLs of multiple millions to billions of dollars. You make a bug in that code, you screw over a lot of people. It's not good. So you can't just fix it later necessarily all the time. Sometimes you get lucky, you can fix it, but a lot of times it's blockchain, you can't. So just know that, understand that, guys. Horizontal scaling, vertical integration, and then I'll diverge into the narratives for HEX, right? For HEX in particular, there's two sets of people. There's two sets of people. You've got kind of tech people and then more traditional investors or people that understand maybe business and financial concepts, but they don't really care about the tech. Most people are an overlap, right? Most people are a little bit of both. They want to understand some of the tech. They probably have an understanding of traditional financial vehicles. But I'm going to start with the tech people, right? Purely going off the tech specs for HEX. This is why I like it, okay? It's got 100% uptime. It's been operating flawlessly for 3 years. It's immutable code. It's real DeFi. What does that mean? There's no backdoor. Nobody can change the rules of the system. Richard Hart can't sneak in there in the back and update something so that, it breaks the code or all the money, goes to him, whatever. It's immutable. That's what immutable means. Unchangeable, uneditable. That's what smart contracts were intended to be, which is why I like it. It's what crypto is supposed to be. And finally, it's secure, right? It's been audited 3 times. It's had tons of peer-reviewed eyeballs on the code running for 3 years. I think if there was a bug in HEX, it would have been found by now, and it definitely would have been found in those 3 audits that were made sure. Most coins only have 1 audit, and an audit doesn't guarantee that your coin is safe, but it sure does help to have not only 1, but 3. So 3 audits, right? On top of that, it's modular, it's isolated. If you're a tech person, you understand what code modularity means. It means that the HEX code is locked in a smart contract away from the network layer. With Bitcoin, every time they update the Bitcoin protocol, they introduce new risk. Every time they update the core Bitcoin core code, you could potentially introduce a new catastrophic 0-day bug that could send the whole thing crashing down. It would be very, very bad. And so with Ethereum, right, the safety feature that smart contracts are allowed is to be locked and isolated away. So when there are updates made to the consensus code, the underlying technology on the network, although there might be a defect or a bug, you could always port over to a different blockchain, or you could, do things to protect yourself because your code is isolated and abstracted 1 layer away from the consensus code. This is actually a pretty important concept in computer science, which I'm not an expert in, but I do have some foundational knowledge in. So yeah, the narrative for tech people, if that doesn't do it for you, real DeFi, 100% uptime, flawless operation for 3 years, no admin keys, triple audited. You might like the fact that it's just simply a better Bitcoin, right? People get triggered over the fact that HEX was literally designed to compete as a store of value with Bitcoin, because that's something that we know cryptocurrencies do. Again, Richard likes not reinventing the wheel. That's kind of the whole ethos of this whole PulseChain ecosystem. If we're not going to reinvent the wheel here, let's take what works already in crypto. Bitcoin proved that store of value and speculation are pretty much the primary 2 use cases of cryptocurrency today. Now, I know there's various utility. Don't get mad. There's tons of different utilities that your cryptocurrency can have, but the primary 2 are always going to be store of value and speculation. People buy this stuff because they think it's going to go up in value in the future. A lot of times, even if your coin does do something really cool, nobody really cares because retail is buying because they want it to go up. So why not start with a better Bitcoin? So HEX is, I know it's a bold claim, right? This might make some people angry because they're so tied to Bitcoin, right? But HEX literally is a better Bitcoin. I mean, there's some objective reasons for that, but there's also, the narrative of it's Bitcoin with a proof of work change. Excuse me. So Bitcoin has this negative externality where, you can sell the price. You need to sell the price down of Bitcoin. If you're a miner, in order to mint inflation, and that's what miners do, they mint more coins into existence. Just like HEX stakers mint more coins into existence by staking, Bitcoin miners mint more coins into existence by mining. How do they do that? They need to run really expensive computer hardware that burns electricity. That's not great for the environment. So as they burn, and release carbon emissions, they get this Bitcoin, which they then need to sell a part of that to pay for their electricity costs. That's called a negative externality. So they will always have that negative externality as long as proof of work is a thing. And you'll see a lot of Bitcoin mining operations going down right now in this bear market because it's just not profitable for them to be running all this. They can no longer sell Bitcoin at a high enough price to cover their electricity costs. And we see a lot of Bitcoin miners, every bear market, we see this, but I've seen a lot, even in this bear market, that are shutting down shop because they don't have cheap enough electricity to keep going. In HEX, we don't have that negative externality. We pay stakers to hold the price up. Okay, stakers are paid to hold the price up by taking inflation, by taking supply off of the table, launching it into the future, and getting paid inflation as a result. All right. So That's it. I mean, it's as simple as that. People might not like it because they're very emotionally tied to Bitcoin, but HEX is a store of value with less negative externalities. And people are locking their HEX for an average of coming up on 7 years now. It's really, really remarkable. I've never seen anything like it in all of history. So, there's a narrative too for kind of traditional investors. Narrative for traditional investors is more of what can you relate HEX to in the real world? I told you the tech specs, right? The tech specs, Bitcoin with a proof of work change, 100% uptime, real DeFi, audited. What about somebody that doesn't care about that doesn't understand anything about what I just said? Well, what's a concept that people like in the real world? What do people like in the real world? They want to get yield. People are seeking yield because their currency is being devalued every day. There's a virtual tax on every single person using and holding central bank currencies because they print so much of it every day that it destroys your purchasing power. It's a quiet tax on all of humanity. And it's awful and it's out of control. And inflation is what got us into this current financial mess that we're already in. So people are always seeking yield, and they do this by delaying gratification, right? A lot of traditional financial vehicles do this. Certificates of deposit, right? The longer you lock up, the more yield you will get at the end of your term. 401ks, right? They disincentivize you from pulling it out early because if you pull it out after you retire, there's tax advantages and all that. Vested shares are another one. You can vest shares and make sure that you're incentivized to keep the company going by launching your ability to get those shares way into the future. High interest savings accounts, all types of stuff, right? People buy stuff, dividend stocks, right? They buy them because they produce yield to outpace inflation. But the goal of cryptocurrency was to replace all the corrupt middlemen at a bank. All right. And so how do we replace all these corrupt middlemen at a bank? The high interest time deposit, all this type of stuff. You create trustless yield. Guys, trustless yield was basically the innovation of HEX. Okay. Bitcoin doesn't pay you to hold it. You can lock it up, but in order to make any yield, you need to give it over to a company like BlockFi that just went bankrupt and they just lost millions of dollars of users' money. So yeah, HEX is the first cryptocurrency that monetizes time. And monetizing time, monetizing delayed gratification is a concept that works in the real world. But instead of getting your yield from a centralized middleman that's prone to corruption, terrible customer service, can shut off your bank account at any time if they don't like what you're doing, terrible hours even, you can't call them after 4 p.m. Well, we have trustless yield now. You can now earn it via code, and code is more trustworthy than men. And that's pretty much an objective fact. People lock their money to earn more money in the future. This is not a new concept to people. So HEX is just monetizing time. It's monetizing delayed gratification, and it's replacing yield-bearing financial vehicles in the traditional system. Make sense? Crypto was invented to remove middlemen. So the real innovation is trustless yield. That's what HEX does. That's what HEX does. If anybody's wondering what does HEX do, it's trustless yield. That is the innovation. And how quickly people forget, right? People are going to forget all about FTX in a couple of months. And there's going to be another one. And there was a Mt. Gox and a Quadriga and a Cryptopia and a Celsius and a Voyager and BlockFi and a Luna. And there are all these things that just lost tons of people's money because people are giving their money to centralized middlemen, the very same middlemen that crypto was invented to remove. So HEX is allowing you to make yield safely, trustlessly. And that's why a lot of us are still here. That's why we have such a thriving community right here, right now. So yeah, guys, thanks for letting me get on my soapbox here and kind of play around with the value prop of all these things. But I want to explain it so that anybody new coming in has a better foundational understanding of why people are so excited. And when people are getting hacked left and right, people are getting hacked left and right in all these centralized protocols. FTX lost billions of dollars of customer money. It's not cool, man. They get pissed off. And the reason that Hexicans are so alive and well is because we always knew, not your keys, not your coins. What does that mean? You hold your own private keys. You hold your own money. It's like money under the mattress. Nobody can lose your money for you. Okay. Sam Bankman-Fried can't steal millions of your hard-earned dollars. So imagine, if Bitcoin paid you to hold it, right? Imagine buying Bitcoin at 3 years old as well. It's kind of like HEX right now. HEX is a 3-year-old coin, very much at the beginning of its S-shaped adoption curve. And Bitcoin is a 12, almost 13-year-old coin. It's got a lot less room to grow, right? And if you've got something with product market fit, and I believe that trustless yield is that product market fit, well, we have a bright future ahead, in my opinion. And the community is here to back it too. A lot of the community members, a lot of people are down. Yes, I understand that. But a lot of people that have been here a while are still up because of how drastically the price in HEX rose. And so it has that kind of potential, being lower liquidity, being newer, being relatively undiscovered. We've had exponential price growth with only linear user growth, right? That's the thing that people don't realize. Imagine if we have parabolic user growth, then the price goes an order of magnitude higher. It goes double parabolic. It goes absolutely crazy because HEX is still pre-viral. Parabolic user growth would be virality, but we don't have that. We have pretty linear user growth, and we've had parabolic price growth with linear user growth. I think that's something cool that not a lot of people talk about. And they're like, what other coin do you have that people are making testimonials about? Go to hex.com, go to the testimonials page, go to all that stuff, and you could see real people whose lives were changed by HEX. Even though it's down 90%, if something's up 10,000x and goes down 90%, that still leaves you at a 1,000x increase. So there's still many people very happy because they're up hundreds of X's rather, or even just tens of X's. I mean, even a 10x is pretty life-changing for some people, depending if you're already kind of doing okay, doing well. So that's why people are excited. Go on to hex.com, go to the testimonials page, right? I'll show you guys the S-curve of technology adoption. Let me pull up a little thing here, share my screen. All right, S-curve technology adoption. This is the S-curve of technology adoption on the screen right here. And this is what I mean when things follow an S-curve of adoption. The one in front of you shows you the telephone, electricity, automotives, the radio. They all more or less follow this curve where it starts off really slow, and then there's a massive inflow. Usually there's a watershed kind of application, right? Could be PulseChain. I don't know. Could be. There's usually some kind of application that gets tons of people in. For example, the internet, right? Started in the early 90s. Nobody adopted it until the mid 2000s. And now this chart only goes up to 2005, right? But imagine if this chart went till today, I think you would see the S adoption curve of the internet reaching a plateau, because what was the killer app for that? It was the smartphone, right? The smartphone put the internet in everybody's hands. And now you've got, I would guess, maybe 90% or more of people, of households now have internet access. And you don't even really need a house. All you need is a smartphone. So pretty cool. Same with the cell phone, microwave, dishwasher. That's just how technology works. And that's what's happening right in front of us, right in front of our eyes, guys, right in front of our eyes. All right. Well, I just ranted for 32 minutes, and I hope you guys have a better understanding of why I'm excited about HEX, why I'm excited about PulseChain, even PulseX, right? People look at PulseX. PulseX is one of those things that it's actually just a smart contract utility. It's just a DEX, just a trading platform, but the coin itself actually has, store of value type parameters built into it. So there's a buy and burn function, and the price of PulseX will generally scale with the adoption of PulseX as a trading platform, because the more volume that's done on the PulseX trading platform, the more money gets funneled in to buy up the price of PulseX and take it off the table. Simple. A lot of people can understand that, but it's very, very powerful too. So one day PulseX might be on the same level of store of value competitor than HEX. I kind of expect PulseX personally to have a slower kind of start, but when it picks up in a couple years time, hey, thank you for the sub, Clifford Carmelli. When it really goes parabolic in a couple of years, I think it could do potentially better than HEX in 4 to 5 years time. That's because it's a function of how many people are using PulseX platform, so it's a direct correlation between the more people, the more popular, the more successful PulseChain is, the higher PulseX is going to go. Pretty cool stuff, guys. Pretty cool stuff. All right. I will look at my chat now. Sorry, guys. I've been neglecting you. Best you stop smoking. What are we talking about? Dun, dun, dun. After 600 hours of skeptical research, I am convinced HEX is a winner so much that I finally staked 5555. That's good. That's cool. I'm glad to have you on the team, G Chambers. Not the HEX tribe. Arc Hexakin, love you, man. Love you too, Arc Hexakin. Love you too. Yeah, guys, a lot of people are doing HEX with the staking ladder strategy. I know I'm really going back to basics here, but people that do HEX, kind of the right way, is they're launching their HEX into many, many different stakes, because staking's optional. I know this is probably a review for you guys, but staking is optional. You don't have to stake at all. But the people that aren't staked, the people that are liquid, they virtually lend value to the people that are staked. What does that mean? They virtually lend value to the people that are staked because their supply gets diluted. Whereas a staker, if you're 100% staked, you experience no inflation from your frame of reference. You guys remember frame of references from physics? If you're a staker, you don't actually experience any inflation because you're getting all the inflation. If you're a liquid holder, you have the ability to sell at any time, but your value is theoretically being diluted by the stakers, and they're virtually lending value. You're virtually lending value to them. Does that make sense? It's kind of hard to conceptualize, but once it clicks for you, it's really, really cool. Hey, Cause D, thank you very much. Says if Hex reaches $1, will you shred with the Gibson? Yes. Yeah, I can do that. I can do that one. I'll play you guys a little riff when Hex reaches $1. Fun fact, guys, I promised everybody in 2020 that I'd get a tattoo when Hex reaches $1. So, you're gonna get a tattoo out of me. Yeah, because that's gonna be a monumental moment when Hex hits $1. I was a little disappointed it didn't happen last bull market, but all things considered, I think we did pretty well on our last ride. Yeah, you're right. I might. It's actually not a Gibson. It's a Ibanez. It's a lot cheaper than a Gibson. Dahidi, love your stream. Cheers, Daithi in Dublin. Daithi, what's up, dude? Cheers from Dublin. Cheers from the States, I mean. CC, can we pick where you get it? No. That's one of the decisions that's going to be very, very personal. Can you imagine? There's no way in hell I'd ever let the community decide where my tattoo goes. Tattoo wear copy? I'm thinking on my arm right now. I've got one right here, on my forearm, but I think maybe my other forearm is a nice little place for it. Just thinking out loud. What are your thoughts on the market bottom? Market bottom is a very interesting topic, guys. What you're going to want to watch out for on the market bottom is the CPI inflation rate becoming lower than the federal funds interest rate. So if I'm remembering correctly, the federal funds interest rate is currently around somewhere between 4 and 5%. It's pretty high. And Jerome Powell has stated that he really sees no slowing down, right? He's just going to go headstrong, march forward, keep raising rates, and screw everybody because we need inflation to come down. He actually stated that Paul Volcker from the 80s, famous guy, he famously raised interest rates to like 15, 20% to try to get inflation back under control then in the 80s. This is like 50 years ago, almost 40 years ago. And so if Jerome Powell is looking up to Paul Volcker, you can probably rest assured that he's not going to really budge and pivot until he sees the metrics that he wants to see. And from what I hear, this is just what I hear, guys, but I think that what they want to see before they pivot and before they lower the velocity of interest rate rises is they want to see the CPI percentage rate, which is a rough indicator of inflation, come lower than the federal funds rate. So they might meet in the middle. They're probably going to meet in the middle somewhere around 7 or 8% maybe. So look for a couple more rate hikes. We might see a crossover of CPI getting lower than Fed funds rate, probably around 7% somewhere if I had to guess. But just a guess, right? It's all speculation. And that will be an excuse for people to funnel money back into things, and the bulls might be back, especially in crypto, because crypto people are a lot more risk on. And so when we have even the slightest little smell of a risk on environment, I think people are going to rush back into crypto first, actually. We might even see this weird situation because, okay, so it goes like crypto, stocks, real estate, right? They all become progressively heavier objects to move. Crypto first, stocks second, real estate third. That's because when shit hits the fan, you're not selling your house, right? You're going to sell your magic made up imaginary internet money much, much sooner than you'll sell your house. And stocks are somewhere in the middle. It has to do with people's shared belief in everything, right? Imagined realities and all that. I think the bear market bottom, it might actually happen. It's probably going to happen quicker. Cryptocurrency is probably going to bottom before stocks bottom, before real estate bottoms. But we might have this weird situation sometime middle of next year where crypto starts going back up and real estate has only just begun to fall because it's so slow to react. we have to wait for layoffs too. Layoffs are another big part of it. Meta, Facebook, Twitter, all these tech companies are now laying people off because they all have fluff bullshit jobs, and they're kind of realizing that, right? So yes, people are going to be redistributed. I think it's going to be net positive. People might get laid off and go somewhere where they're more happy, hopefully, maybe happier, maybe more fulfilled, maybe better suited for their jobs. But Twitter fired like 90% of their workforce because nobody was even coming into the office. Nobody was doing any work anyway. And these layoffs are a good catalyst, another good catalyst for the Fed to ease up on the interest rates. You know what I mean? So this is all just natural cyclical movement, but it's also just a good excuse for the Fed to lower interest rates. They could say, okay, well, CPI is coming down a little. Unemployment's going back up because all the tech companies are firing everybody. Maybe that's a good excuse to start printing more money again. Maybe. But because crypto reacts so quickly, like the blink of an eye, crypto is the first, sector to get the news, to respond to the news. That's why, even HEX even topped before Bitcoin. It's crazy, right? The altcoins even react faster than Bitcoin, which reacts faster than the S&P 500, which reacts faster than, housing prices. So that was a long-winded answer. When do I think the bottom will be? In HEX, I mean, we can maybe look for a lot of boring action, maybe between 1 penny and 3 pennies, maybe up till middle of 2023. But I think that crypto people are like sharks, and when they smell blood in the water, when they have the slightest little inkling of maybe interest rate, maybe the Fed's going to pump more money, quantitative easing is back, we could have a surge in the markets. And the surge in the markets might also just be a fake out too, because it might be one of those situations where, people react too early and they jump the gun and everyone thinks crypto's back. And then HEX goes at, 30, 40 cents. And we're all, so happy to be back. And then maybe the Fed comes back with, okay, inflation's back, risk off. It's like Wayne's World, right? Risk on, car, risk off, So we might be playing a little bit of a back and forth, right? Like ping pong with the inflation rates. But I mean, those are what you got to keep your eye on. And I can't really predict a timeline for that. I mean, middle of 2023 is just a random number or a random date that I pulled out of my butt. SJ, we have several excellent tattoo artists in the community. We do. I might get the guy that did SJ's tattoo on live stream. I might get that same guy to do my tattoo. Seems like he's pretty good. Do you think the SEC is friend or foe or something else? I think that regulators are going to regulate. They're just trying to do their job. The road to hell is paved with good intentions. Everybody thinks they're doing the right thing, but the bigger these three-letter agencies get, the more inefficient they become too, and they start becoming a detractor to innovation. And so I think while the SEC squabbles with the CFTC and, the existing Federal Reserve is making their central bank digital currency, I think what's really important is to innovate faster than they can regulate. PulseX, the new wallet coming out. I'd bet you that the new wallet that Richard Hart's creating is not going to have any IP trackers. It's not going to have any of this BS that MetaMask and Uniswap are doing, right? So SEC being friend or foe, I look at all centralized authority as foe. You know what I mean? That's just my ideology. I get why we have rules. I get why we have investor protections, but to protect investors and say that you can't buy something unless you're an accredited investor, it's a bit offensive to people, because you're basically excluding people from having the same opportunities just because they make $300K a year or more. So the rich get richer and the poor get poorer, right? I think what is really important for the SEC to focus on, if you're listening, SEC, is education, right? Educating people. I think what they did with the fake ICO, that the SEC made a fake scam ICO in the last bubble. I think that was a great way to educate people on scams and how they work. And really what we should be doing is we should be teaching people in schools about finance. We should be teaching people in school about crypto and how risky it is, so you don't have to listen to people like me tell you that crypto is extremely risky, right? It's the most volatile asset class in human history. And it also is the highest appreciating asset class in all of human history. I've said that day one, I bang on that drum. I beat that dead horse, but people don't hear that enough, and they don't understand real crypto versus fake crypto. And the SEC turns a blind eye to FTX, and now they're focused on Taylor Swift tickets, whether or not they're security or not. It's outrageous, right? But it's just people and organizations doing the best they can, and the bigger they get, the more inefficient they get, right? Because there's just so many competing interests. Like, oh, some guy's daughter at the SEC got screwed over by a Taylor Swift concert. So now they're all going to go after that guy, like the ticket sales person. I don't know. It's just, we live in clown world, right? And so I'm always a fan of less regulation, let the people decide. But you can't let the people decide what to invest in if they have no education. So that's my number one goal, is to be the person educating so that people can make their own informed decisions. I don't tell people what to do. I try to teach you how to think critically. That's what I just did for the first half hour of this course, right? So although they're going to try the best they can, I think the only real solution is education. Maybe there's a situation where in order to invest in crypto, you should have to take a test. Maybe you should have to take a test so you understand what's the difference between self-custody and non-custodial wallets versus custodial wallets. What's a private key? What's a public address? What's a Ponzi scheme? What's the definition of a pyramid scheme? Like, there maybe should be some kind of a certificate that you have to take a test for in order to be able to participate in crypto. I would say that's kind of reasonable, but really education is what I want to see out of the future. I don't think too much about the SEC. I think it's all going to work out. HEX education, right? HEX education 101, right after sex education. RH products are all I really trust. LOL. Yeah. Great explanation of crypto from the bottom. Thank you, Dave. I tried to do that on the fly. The reason is I'm actually redoing my whole course. And so I'm helping, you guys are helping me help you guys, because I'm kind of just, it's like an open mic for me to try to figure out how to best explain the value props of crypto and HEX, PulseChain, all that stuff. Don't want to raise the bar to entry. Yeah, that might, I don't know. We could debate about, these are just my ideas, right? They could be wrong, right? Maybe a test is a bad idea, right? But I'm pretty sure I shouldn't have the right to vote about a lot of things. Like, it's funny, like Uniswap, right? If you buy the UNI token, you get like voting power in the protocol of Uniswap itself. And I wouldn't feel confident voting in any of their decisions, because I just don't have the technical expertise to be like, okay, yeah, this is definitely a good idea. Maybe I would vote against the IP tracking. maybe I would vote against like the censorship and all that. But sir, I don't think everybody should just, you should have a competence, right? I believe in a meritocracy, right? Although I believe in democracy for sure, but you should have some level of competency to prove that your opinion is worth valuing. Yeah. Like David James has license to breed before license to invest. Lol. That sounds a little apocalyptic though. You know what I mean? But then again, what's that movie? What's that movie where they're all talking about electrolytes and idiocracy, right? Yeah. Sometimes I feel like we're going into idiocracy mode where the stupid people keep breeding and the smart people don't want to have any kids. And then we live in a world where Terry Crews is the president. Might not be the worst president. Oh, for sure, coffee. Good practice run. Yeah, no problem. Well, that's what I think about the value prop, guys. I mean, where else do you have, the technical narrative, the traditional financial narrative, horizontal scaling, vertical integration, walled garden, and you've got a community backing all of this. You've got a community that really understands what we're doing here. We're making products that last 10 years or more, right? We're making products on a decade-long time scale. We're not making products that are designed to pump and dump, okay? Now, yes, crypto as a whole pumps and dumps all the time on a multi-year time scale. That's what HEX is doing right now. It had 2 years of pump and now 1 year of dump. But when I talk about pump and dump, I'm saying we don't want things to just be gone in a month or two. We're playing a year's game, not a days and weeks game. We're playing a months and years game. And so a lot of people can't fathom that too. They have a hard time wrapping their head around HEX because it's actually designed to save yourself from yourself by paying you to stake out the bear market. We're all staked out here. We're all staking and having our interest, our APY, offsetting our losses. Whereas, everybody holding Solana, everybody holding FTT, name any coin, right? Name any coin. They're all down about 90% from all-time highs. Any coin that's not Ethereum or Bitcoin, that is, right? They're all down about 90%. At least we're getting paid. At least we're getting paid to stake out the bear market. That's a design feature. That's an intentional design feature to save yourself from yourself. Hex protects you from your own worst enemy, which is you. Like, I am my own worst enemy. My brain, you know, like my emotions are going to get the best of me if I'm not locked and if I'm not penalized for pulling out early, because things come back. Everything is cyclical, guys. I mean, if this is your first cycle, look at crypto around you. Look at what's being built. Look at the fact that even the social metrics are growing every day. The number of new stakers growing every day, which in my opinion is a better measure of adoption than anything, because you can't have a bot do that, right? You can't dust a bunch of stakes. You can do dusting attacks for retail, where you send like one hex to 1,000 wallets, and then it looks like you have 1,000 more holders. But stakers, you can't dust a stake, right? So you need to actually press the button yourself if you want to be a staker. This measure of adoption is still going up in a bear market. Pretty remarkable. There's more YouTubers than ever before. There's more products coming to PulseChain. There's at least 100 products built on for PulseChain that are coming. You see the people building right now. You see all the buzz and the excitement. You realize it's not going anywhere. Okay, like, I mean, short of a nuclear war, God forbid, or like an asteroid hitting the Earth, right, where then we have bigger fish to fry. Like, if the internet's still around and the financial cycles come back, we're going to be just fine. It might be 6 months. It might be 2 years. I don't think it's going to be much more than 2 more years. But, you know, you got to be prepared for all scenarios. Really, you got to just be prepared. You know, if you're working a job, don't quit your day job now, obviously. Dollar cost averaging is what has worked in the past for a lot of people. Let's see. Win $2.01 Hexo. Is that what Hexo predicted? Yeah, that is, right? I don't know, man. I think in the next bull, we can easily see Hex in single-digit dollar ranges, you know, easily. Now, $10, $20, that would be extreme, right? That'd be very, very bullish. But, you know, I say this all the time. Things can always go way higher than you ever expect in crypto, and they could always go way lower than you ever expected possible. So, you know, a lot of people, because it's a bear market, they're giving very, very conservative price predictions for the next bull market. Just like in the last bull market, they were giving very, very, you know, irrational price predictions for how high things were going to go. Not just Hex, but Bitcoin. Bitcoiners were shouting about $200,000 Bitcoin, $1 million Bitcoin. And then what does it do? 69K top, boom, crashes down to 16,000, lower than the previous cycle. Bitcoin's never done that. It's never crashed to a price lower than the previous all-time high of the last cycle. So this just broke all the Bitcoiners' brains, and everyone's kind of coping in their own way right now, to be honest. Stake long, no worries. When will the next bull market be? Dude, I mean, I don't have a crystal ball, man. Like, you need to make that guess for yourself. Like, I think 2024 to 2025 is likely, but when people ask questions like, when will the top be? When will the bottom be? You got to realize that nobody knows that answer, and anybody telling you they know is bullshitting you. So be careful of anybody claiming they know anything with absolute certainty. Okay, be very, very skeptical of those people. I want to teach people how to think, right? So these are the metrics, right? I told you what I'm looking at to make my conclusion on when the bull market might be back. Take that information and make your own opinion, right? You should never rely on the opinion of a YouTuber as like your fact, because these are just opinions of people that like crypto, right? So yeah, price predictions and all that stuff. It's fun to a degree, but I used to be like that too. I used to be the guy that would go on YouTube and just search, you know, coin XYZ price prediction. I would just watch a price prediction and it would give me some hopium and some false sense of confidence that everything's going to be okay. Nothing is going to be okay for you unless you learn how to think critically for yourself and draw your own conclusions based on real data and reanalyze your thoughts every so often. Make sure they're still true. Make sure that, you know, your original principles haven't been changed or anything like that. You know, teach a man to fish, blah, blah, blah. Texas says he doesn't have a tie to wiggle. Yeah, but I do have a ask me about Hex shirt on. So there you go. Maybe I'll wear a little bow tie for you guys next time. Let's see. How will interacting with the PulseChain testnet be beneficial for holders? Well, you can test it out, guys. I mean, you got to know what you got into, right? If you guys go watch my previous videos, in the description, there's a link to the PulseChain PulseX testnet. You can get a better sense of how it's going to be in reality, right? Give you more conviction, if nothing else, right? More conviction. I love ETH fees at the moment. Yeah, they're not going to be like that for long. Not for long. Teach a man to fish, you get rid of him for weeks. Yeah, exactly. No more. How much money do I need to put into Hex? I hate that question. How much money do I need to invest in Hex in order to become successful? It's like, bro, only you can answer that question. No offense, guys. No offense, but I mean, I'm just trying to hold ourselves to a little higher standard than here. Richard Hart will light the candles at the start of the next bull. Green candles are go, baby. Yeah, that'll be very symbolic. Richard Hart's got candles when he lights them. He lighted the red ones a while back too. Let's see. Are the number of hex stakes calculated per stake or per stake per wallet? Stakers. So it's hex stakers, and stakers are usually calculated per wallet. So I can have, 30 stakes, or so I should say that they're calculated per address, per public address, right? So if we've got 110,000 active stakers, if I've got 10 stakes on one address and 10 stakes on a different address, I look like two stakers. You know what I mean? I look like two guys. And then HSIs come into the play. HSIs make everything a little more complicated because every HSI looks like it's its own individual entity. That's just the way it works. Because every HSI, every wrapped stake on Hedron looks like is a little advanced, but the staking metrics might be a bit inflated because HSIs account for maybe, let's say, 10,000 stakers, whereas in reality, it might only be a couple of hundred people. But either way, even if you like subtract 10,000 as an estimation to account for HSIs, the metrics still look really, really good. You know what I mean? We're still onboarding almost as much people in the bear market as we had in all of the bull market. Pretty wild to think about adoption going up that much in a bear market. And a lot of people, I think, they bought liquid and now they're, their bags are down and they're realizing that, well, everything is down. There's really no safe place for this hex unless I sell it for US dollars or I could stake it. So I think what a lot of people are doing is that people that wouldn't have otherwise staked are staking because they're actually trying to protect themselves from a bear market, but they do believe in hex longer term. That's the only explanation I have for why we have so many stakers right now. And of course, we're always onboarding, right? People are always coming in. 38,000 hex per 1,000 US dollars. That's remarkable. Imagine if hex was $1, right? And you could get $38,000 for the price of $1,000. Imagine. What it do, Hexikins? J-Man. What's up, dude? 14 cents, blah, blah, blah. Okay, guys. I am coming up on 1 hour here. Thank you for spending your Saturday with me. I hope it makes sense to you guys. I hope you guys understand why I like Hex, PulseChain, and PulseX. At least as kind of the new frontier, right? It's the new paradigm. We're building a completely separate financial system on PulseChain. Hex is the store of value app. PulseX is the trading app. These are just apps that appear on blockchains. It's like right now we're in the era of, if you want to compare this to 2001, the internet, right? People were arguing about, TCP/IP, V4 versus V6 and stuff like that. People were still arguing about protocol level things. But once we figure out all the protocol level things, then the value accrues at the endpoints, right? So then you get the killer apps and all the value tends to actually go to the app. We're going to get to a place where you're not even realizing you're using a blockchain anymore. Like once you realize that once we're at a point where you don't even know that you're using PulseChain or Ethereum, that's when all the money flows to the, Hex, PulseX, liquid loans, all this stuff that people are building that's real DeFi. Money flows to the endpoints because it's like people arguing about what's better, like Comcast or, which cable provider, which internet provider, is it RCN or Comcast or which one's better? That's like arguing about, is it PulseChain or Ethereum? It's like, it's probably going to be all of them. It's probably going to be 4 or 5 winners of the network layer ones, AVAX, maybe Phantom. I don't know. Probably not Solana anymore. There's going to be a lot of winners in the network layer 1 game. But then we get the Netflixes. We get Netflix, Facebook, Twitter. These things are built on top of the internet. Right now, we're arguing about like the pipes of the internet and which pipes are we going to use? Once that's no longer a question, then everyone's going to be talking about which apps are the better. We've already got the store of value app, premier store of value app HEX, and then the premier trading platform PulseX. Guys, I am tired of talking. Biggest PP community, that's right. Our edge products will dominate. Yeah, I believe so. I believe that genuinely, but that is just my opinion, man. All right. Put a homeless guy in the corner with a QR code and watch his wallet and teach him how to use it. Okay. I'm not doing that. I'm not letting anybody in here. Mango Junkie, what's up, dude? Torin, great stream. Thank you. Guys, I really appreciate all of you coming on a Saturday. Saturday, guys. Thanks for spending your time with me. We'll have a more fun stream sometime soon in the near future. Just wanted to get this educational one out there. Peace out, boys and girls. Remember, stake it till you make it. Keep calm and hex on. It's all going to be okay. Bye.